To that iron ore sector, because I guess more broadly that resources weakness is going to weigh us down today. Why do you think we've still got selling in some of these stocks? It feels like the iron ore slump story is kind of well known. Why are we still seeing that selling?
The story is well known. Another 5% drop now. Iron ore prices have now actually halved since their peak in their high levels in 2011, early 2011. And Fortescue, as you mentioned, just selling off significantly this morning. Even Andrew Forrest buying up a significant chunk of shares hasn't instilled any confidence in the market. It's been a terrible run for Fortescue shares. Fortescue, of course, pretty much derives almost 100% of their revenue from exports to China in the iron ore space. We know that sort of around September, October is the seasonally the most weakest time for iron ore spot prices, but we're also seeing destocking in Chinese steel mills. Now, when the price of iron ore sitting around $90, well below the marginal cost of production for Chinese domestic producers, you would expect them to start cutting some of their production of iron ore, which would help support the iron ore price. But I think there may be some subsidies going in from the Chinese government for the Chinese domestic producers at the moment. So for stocks like Fortescue, Atlas Iron, one single play iron ore commodity stocks, we're going to see heavy falls on the market today for those.
You know, what do you think of this turnaround story that could occur? They're talking about China being in the middle now of a considerable inventory adjustment. If they're in the middle of that, you know, in terms of catching a falling knife on the broader rebar price, where are the expectations for it next going? I mean, it would seem on that basis that there's further to fall.
There definitely could be further to fall. It would be very difficult to try and estimate where it's going to bottom at. But at $90 a tonne now, and you said in the middle of sort of inventory readjustment in China, which is something that which is a lot more significant this year than it has been in past years. And that's why we're seeing such a significant effect on the iron ore price. But trying to estimate a bottom is going to be very difficult. I think a lot of brokers and analysts would expect the iron ore price to recover somewhat, but it's not going to be until later this year. I think possibly when we saw that decreasing iron ore price earlier this year, analysts expecting it to start rebounding sort of fourth quarter this year. This may now well have been delayed right until the sort of end of this year until we see a recovery in iron ore prices. But if you look at the export statistics, some of these companies like Fortescue have been saying that they're still shipping all of their product that they are producing off to China. A positive for Fortescue, of course, even though the iron ore price is falling and the amount of cash they receive for selling their iron ore is falling, they're looking to ramp up production significantly, tripling their production by next year is the target. So that will be a positive in terms of offsetting some of those falls in the iron ore price.
Give us some thoughts on Boart Longyear, because we've got the reporting season, although this is grabbing headlines. We'll move on. Boart Longyear's first half results. You felt the guidance was a little bit disappointing with this one.
It was. The guidance here was disappointing. Net profit pretty much came in on expectations. First half profits of $97.7 million. A good jump in first half profits, but they've actually downgraded their guidance for full year quite significantly. Previously it was to be around $460 million. This is now to be in the range of 460. It was going to be now $360 to $390 million. So there was a lot of talk coming into earnings seasons about what companies are going to be forecasting in terms of full year 2013 type guidance, as well as second half guidance for the companies releasing first half results. And unfortunately for Boart Longyear, they've downgraded their guidance, and probably the market's not going to take this too well. Certainly we saw Ausdrill's result yesterday, which is sort of a comparable kind of company within the drilling space. They actually reported quite a positive result, and their outlook was fairly positive, looking for revenue growth of around 15% for the full year next year. But we've seen Boart Longyear this morning also cut their revenue forecast for the full year. They were looking for around $2.3 billion for the full year. This has been cut back to around $2 billion. They've also cut back on their capex expenditure by 8%. We have seen quite a few mining companies in this earnings season either delaying or reducing their capital expenditure. Now, a lot of their capital expenditure at the moment is going into their drill rigs and replacing and improving their drill rigs. So it'll be interesting to see the commentary, interesting to see from the company where that capex is going to be reduced from in the company. Now, this company did look fairly cheap in terms of valuation, did trade at a bit of a discount. It's had a terrible performance this year. It's down about 25% on the quarter. So today, disappointing to see that guidance reduced.
Well, on the quarter, it's just lost 28% as we speak. It just disappeared right before your very eyes. Gone, down. All right, let's move on. Perpetual, full year numbers. Some sort of a transformation strategy is out there. Is the market buying that one?
Well, this is what I think was going to be important for Perpetual. Certainly, we know it's tough times for fund managers at the moment, difficult equity markets in particular for brokers and fund managers, but they are undergoing a significant turnaround strategy at the moment, Transformation 2015. Now their net profit came in line with their guidance today, full year $26.7 million. It was down 57%, unfortunately, but if we strip out some of those impairment charges, etc., that we did see, underlying earnings were only down by 7%. And they were really impacted by the current difficulty in market conditions, as well as just the cautiousness we're seeing in investors at the moment. But as mentioned, the transformation was what I think the market was going to be looking for and how that is progressing. The CEO comments, he was quite positive on how the transformation strategy is going. This started under the previous CEO. It's continuing under the current CEO, Jeff Lloyd. Perpetual has struggled a little bit. They've seen a few different CEOs in a short time space. They saw their top stock picker leave the company to start his own business, but the company now, the comments from the CEO, they're not waiting for the market to turn around. They're not sitting on their hands. They're looking to transform the company, adapt to changes. They're reducing staff levels. Staffing is expected to halve by 2013. They're outsourcing their IT department. They've sold off some of their businesses like Smart Super and their business in Dublin in Ireland. So it looks like the company trying to be as positive as possible in a difficult environment. The company certainly has a strong track record in terms of fund performance, so that will put it in a good position for when there is a turnaround in market conditions.